surprising since we're 1% interest rate better year over year. Refis are still 3/4 or 75% of all loan applications. And continued purchases are holding in there, 25%. The MBA economist Joel Kahn stated the purchase market is still expected to rebound as long as health measures continue to reduce the pandemic spread. Retail sales dropped in March, but food and beverage and online ordering showed great strength. And of course, clothing sales, restaurant, bars, furniture, auto, gas all fell between 17 and 27%. So rates continue to be flat as of today. Refis and purchases it's a strong time. And I got to tell you, I'm real excited about today's show because we're going to talk about what everybody's doing, the impact of the virus here in the United States, the impact of our desire to get back to work, the desires to move forward with our lifestyle that we choose. And today's show is going to be talking a lot about those things. I've got some great co-hosts, as well as we have some guests here with us. Alan, great seeing you. Good distancing there, brother.
Thanks, Blair.
Hey, Tom, always good. Glad to see you're still shaking, brother. That's always
I know, shaking and baking.
There you go. And we've got Kim and Cammie with Providence Title. So glad y'all joined us today. Thank you so much.
Hi. Thanks for having us.
Oh, our pleasure. Our pleasure. Hey, I want to talk real quick about the virus and guidelines, Tom. Some things have changed, and Kim and Cammie, you're right in the middle of closings. You're still doing your work, right? You're still open for business.
We sure are. We sure are. We're obviously taking steps to try to keep everybody as healthy and safe as possible. But we're still in business. We've got some members that are working from home, and some are actually still coming into the office. But yep, we're still in business. We're an essential business, so we are here.
So are you following along with the stats that I just read off that it's really more refis right now than purchases, or are you seeing more purchases?
We are seeing a lot more refis. Still seeing purchases, but definitely refis have increased a lot.
We are hearing from agents also, though, that they all have listings ready to go and things to put on the market just as soon as all this passes. So I think it's kind of the lull, and then we'll hit the storm again, hopefully with the summer season.
We got our finger in the dam ready to go. I understand. Now, one of the things that I think I want folks to understand, and a lot of things that impact our industry right off the bat, how appraisals have changed. I mean, the standards, the guidelines have changed dramatically in my mind. Tom, would you agree they kind of changed dramatically? Because right now, DU's coming up with interior, exterior, or just exterior appraisals. And we're even seeing remote appraisals being approved. Is that correct?
That's what I'm understanding Fannie and Freddie are doing, which is interesting to see. I mean, this type of adjustment in our marketplace was kind of, the technology has been there. So why haven't we been using it until now?
Exactly.
It's like, sure made things easier. A year ago we were doing this.
Oh, definitely. What were you going to say?
That's why I think we're going to come out of this all better in the end. We're learning a lot, how to conduct business a little more efficiently, a little smarter. Kim's right. There are listings ready to go as soon as we can get through what we're going through here a little bit. And I think it's going to get better. Just don't know exactly when, but I think we're going to come out of this better, more efficient in the way we went into it.
And I think we are. I totally agree, because I mean, as I'm seeing guidelines, as I see how people are learning to do things like our show here, we're normally in a studio together, but we're talking about, okay, a traditional appraisal, interior, exterior. Then we're talking about, they called it a desktop appraisal. I couldn't believe the term, that it really means what it's doing. And then you got exterior only. That's a major change in how moving forward, if those guidelines stay, could make things much easier to turn. Our turn times could be, my goodness, a VA appraisal generally takes 10 working days. That's 2 full weeks. And even then we don't get it. Now we have these guidelines. We could actually be turning loans inside of 15 days fairly easily. And so I guess I want to really focus on how our industry is changing. Is everybody familiar with PIWs, or property inspection waivers?
Yeah, the one thing about getting more efficient and streamlining things are at the expense of doing things right. There's a lot of realtors out there praising virtual showings, and some are on Facebook. Oh, I'm booming, blah, blah, blah. Well, a lot of it is, marketing, and they're probably not booming like they're saying, but it can be done. But, when you're talking the biggest purchase of your life, 99% of us anyway, you're going to go touchy-feely. You're going to want to go in that house. A camera ain't going to do it. Now, if you're investing, you're buying investment properties, you drive by, you look at the outside, the area, your experience, that's different. But if you're going to raise your family there, and it's 80% of all the money you have, 90% of all the money you have is in your house as far as your net worth, I think things are going to come back to, showings and appraisals. I don't know. I guess you can do that. A lot of them, I think, in the past haven't gone inside. They just look at the outside and look at the comps around the area, and they're done. Others want to go inside. So, I don't know.
Well, and I guess I would challenge that, there's a big difference in inspections and appraisals, and then surveys. I mean, we have Kim and Cami here to talk about the requirements for surveys. So many times we can get a survey approved. I don't need to see it. It's title that needs to see it. So are things changing on the title side in that way, like it is for guidelines for Fannie or Freddie for us? How is it with you?
Kim
Or Cami?
or Kim?
So we're hearing bit pieces, so we're trying to follow. But are you talking about this? It?
I can barely hear you. We're talking about or asking what impact are you seeing, like I'm seeing in guidelines for underwriting and for loan origination? What are we seeing in title? What impact are you seeing, like I'm seeing in guidelines for underwriting and for loan origination? What are we seeing in title? I'm getting some feedback.
I'll give you feedback.
Give me feedback. I don't know if we've got them. I don't know.
There they come.
Yeah, okay, here's where we were. Blair was asking you guys at title if you're seeing anything different in how surveys are being done quicker. Are you using older surveys, or what's going on with title and survey and you guys at what y'all are doing with lenders?
With title and lender.
And surveys.
Yeah.
Okay.
Concerning
Well, as far
surveys.
as turn times, I think that was one of the questions. We're still seeing turn times about the same. And as far as surveys, our surveyors have still been to go out and do still the same kind of time frame. The rain kind of got things for a little while, just with the weather, but surveys were still coming in. We are able to approve lots of surveys that sellers provide to us. We do send them to the underwriters to review. But if at all possible, we do try to use a seller survey. But again, that's one of those things. As soon as we get title work in, we can get an approval over to that. So we're seeing same timelines and everything as before, really. Don't you think?
Yeah. And as far as using the existing survey, as long as there have been any drastic changes to the property since that survey was done, then we are able to use, that existing one. But of course, again, it would have to be approved.
Are any guidelines changing for you at all in the title process, whether it be refis or purchases?
None of our guidelines really are changing. We do have steps in place in case any of the counties shut down. If that's the case, as far as recording, we'll have steps in place for that. But as of right now, there haven't been any changes really in our underwriting, anything along those lines. We are trying to get more the Ron Romano That's
Hello.
Yeah, I think we're having a hard time getting through. But since appraisers do their thing outside a lot, probably not near as affected. Because they're walking around outside. Excuse me, surveys. Surveyor. Yeah, my bad. The
Because
surveyors,
they do what outside?
they're working outside a lot.
Oh, okay. Okay.
And so they're not in groups, and they're probably not wearing masks and stuff like that. They're doing their job and can do their job. What I'm seeing in the realtor world, and I went out and showed homes yesterday. I showed some condominiums. Very strange, very weird. First time I ventured out because I'm legally able to do it, but you have to, is money more important than your health? Absolutely not. Never will be in my world. But some of the listings say, wipe everything down that you touch and wear booties or whatever. And they're trying to come up with things that really aren't good ideas, a lot of them, but they're trying. But basically, the person I was showing yesterday was a nurse, and I'm going to go out and show her some more after this show's over. And I've been unlocking the door with my hands and then washing my hands very thoroughly, and then letting her go into the house and look. I stand in the doorway, and if she has questions, she yells them at me. And then if I have to look at something, I go in and look. But we're staying far apart, and that's about the best you can do in this environment. And it went pretty well, pretty efficient. But I will say this, I saw a lot of people outside in the neighborhoods. And so, most weren't wearing masks and just walking their dogs or running around. And I don't know. So I think as with this COVID-19, and nobody really knows exactly what's going on, we all have our theories, some deeper and darker than others, but business is changing. And in real estate, I personally would never buy a house virtually. I wouldn't do it. I just would not do that. And if I was in an emergency situation where I was being relocated and that is going on, people, their jobs are moving and they have to live. Well, you could still go out and look at that house. You have to take precautions. But, I've seen people online saying I sold, 10 houses since it started, all virtually. And I'd challenge that to a certain extent. If it's families you're having move into a house, mom and dad are going to look at it. That's my opinion.
Well, and I saw an uptick today coming to the office. I've been coming to the office. I lock myself in here. I'm able to do what I need to do, but it was crazy out there today. Traffic was actually full. But I guess I'm seeing more and more. I think we're going to come out of this better, like you said, Alan. But I think we're going to have some different options available. Like, did you displace some people to show those homes yesterday? I mean, there were people empty.
Did not have to yesterday, but today, yes. And, where are you going with that point?
Well, it not only impacts wanting to see the house, I understand, but somebody has to leave to let your client come in and view. So there are things that we have to change. I mean, it's just like my wife, we did the first time ever buying online for food. I couldn't believe it. I never have done this before in my life. We had to schedule a pickup, all this stuff. And then of course, she went through the process of me bringing it in from the vehicle and then wiping down everything. Now, good, bad, or indifferent, I just see a change in our processes. I think we're going to still see changes, and I think we'll be better for it. But where I'm trying to go is we need to be, I guess, flexible and teachable in our professions to understand what's the best way to move forward. Like you're saying, I've never seen appraisals done. Tom mentioned that, but why aren't we doing this before? Why couldn't we speed up the process before? Inspections, I agree. Appraisals are for the lender. It's creating a value for the home. So I guess I can see the difference. But, we have many different things going on. Property inspection waivers are given out a little bit more easily now as opposed to before. What else are you seeing, Tom, that is different? I mean, I can't go to my closings anymore. I've been told I got to stay outside. I can't go in with my client to close. And that was going to be one thing I wanted to talk with the ladies. I hope they get back on. But I understand, but I wait outside to see them. I wait outside to see if they have any further questions. I still want to give that personal touch and be there because I normally sign the 1003 on funding day.
And
Right.
others are handling that. I've heard through technology, like if they're not necessary at that particular moment to keep the number of people down together
Yeah.
in a small room, then they're hooking up on FaceTime to where you can see and listen in from the next office. And if a question has to go to Blair, then it goes directly to Blair, and they can still see your face on how you're answering the question. That can be handled no problem, I don't think. Tom, I think, hit it on the head with the earlier part about the efficiency thing. It's definitely going to make us more efficient on a lot of this stuff to the point where some people might not get some of their jobs back. It's going to clean things up. All companies coming out of this, whatever we're in, are going to try to be as efficient as possible with money. They're getting loans. They're coming out of their pocket, depending on what they're doing. And whenever they start back up, they're going to try to be really money conscious. And this technology that we're using now is probably going to be at the forefront.
Probably. Tom, I want to go into a couple of changes on the guidelines. One of the biggest ones that is critical to somebody doing either a refi or a purchase is the requirement now set up by Fannie, at least what I'm seeing here, and I believe Freddie's doing it as well, but is the verification of employment, minimum 3 days, prefer closer to 1 day before closing. This is new. This is added in, and we have to be able to get that verification quickly so that the loan moves forward. What are they preventing or trying to make sure because of changes in our shaking future? What explain to our listeners, what are they trying to do with that extra verification?
Well, I'm kind of surprised that the company you work for doesn't have a policy in place. I've never worked for a mortgage lender that did not require that we check the day prior to or the day of closing as far as the employment. Now, they don't have to have a written one. They just have to have an employment manager. And so in my world, that would never have changed because, simply put, and what the investors are always doing with that requirement that they've had in place for the most part since 2008 is that the people that used to come in and change jobs, the week of, they're getting their new employment with the ideas of, hey, I'm going to get all this additional income and money and all that good stuff from my new job, but they qualified on their old job. Yuck. In other words, it's not so much a transition in our industry. It's just something that is absolutely a condition that there aren't any investors, even those that are going to service their own loans, are having that because they don't want to run a risk of, hey, they're out of work a week later and they can't make their payments. That sucks.
Well, and you're right about the verification. It is there. We do it. It's the written verification requirement that has been added on, and it's been stressed for us to stress to our borrowers, hey, we need to make sure, because if you're furloughed, you're not let go of your job, you're furloughed, that we still need to get written verification from HR that you are employed. Just like in the military, that this gentleman's been deployed, they're buying a home, we got to get a commander's note stating this soldier is still alive at this time.
So your question is about the actual physical written verification of employment.
Yep.
And as far as the furlough, you're saying that your company will do a loan with somebody that's furloughed?
No, didn't say that.
Okay. Well, we make sure our listeners understand, because I've heard some really strange stories about people using, for instance, their check that's coming from this assistance from the government for their down payment. If I was an underwriter, I'm not sure I would be so keen on that assistance check coming in to use for my down payment. So we're seeing, people are very creative. They're still desperate to need and want to buy a house, but we're seeing lots of these pending contract circumstances coming back on the market. As a matter of fact, I think, Alan, you sent me one today that showed that it was not under contract anymore, that it's back on the market. We're going to see that because I think inherently underwriters are going to be tougher on these circumstances.
Yes. Alan, you had something? I'm sorry.
Yeah, first off to Mark, Cammie's on the line saying that they are on video, but says host has to invite us in. But that said, Blair, to your answer to your question to both Kim and Cammie from South Lake Title, it says, quote, "We are only allowing the signing parties, no agents, not loan officers. We also offer curbside service if the clients don't want to come in and would rather sign in their car. Another option is sending mobile notaries to the client's home if they don't want to come out."
Mobile notaries have been available for a long time. Are we just now using them more?
Well, you've still got a restriction on the cash out in Texas thing. I'm sure that because of the lawsuits that are there, even with the way it is. And keep in mind, when they see 75% of the business being refinanced, a lot of it's cash out. I doubt you can do that remotely. I doubt you can do that virtually. I doubt you can do that with anything but the touch and feel in the office of the title company. That'd be a great question for Tammy coming back.
Yes.
Yeah, Mark, they said they need to be invited in. They're waiting to get in.
Okay, we'll see if our production guy can get on that.
And does somebody have so they can respond to David? Is somebody respond to him?
He said hi, I think.
He did.
Hello.
Normally we can respond by clicking on, and so I'm wondering if somebody.
Hi, David.
I can respond.
Somebody can respond. I don't have the capacity to.
Or the knowledge.
No, usually I click on it. I'm pretty good with this. I'm teaching Zoom classes, by the way. Don't underscore the fact that I've got 50 in my class, 40 in my class, get a lot of these chat boxes going on. And so it's nice to be able to, respond to people's questions when they have those questions that they come up with the chat boxes. So,
yeah, well, and
this is another new technology we've got to get used to, right?
Exactly.
I mean,
us old guys got to get used to this new stuff.
Yeah, my school's trying to get us back in the classroom in May for sure, if we possibly can. But at the same time, it's like my class. A lot of the people that want to take me live don't get an opportunity anymore, and they have to adjust because basically I'm talking for 8 hours. Yikes!
You tired of talking?
That's
Is that
not.
what you're saying?
I could support that. I probably they get a feel for it, and it's hard to stay up 8 hours talking. Up as in fired up.
Well, if you would, let's talk about and let's help our listeners understand. There is a change right now because of the IRS has a temporary suspension of service. That means they're not even open. We can't even try to get transcripts. What are we accepting now in the industry as a standard for 2 years tax returns, and how will we look at that? How does 2019 integrate, or do we take a P&L and a cash flow? What can you help our listeners understand about the changes, but yet we can still do self-employed borrowers through this process?
Well, still they're going to have 2 years tax returns, so they would have had to file them in 19. Would have had to file them in 18. It's the ones that we normally after April 15th, which by the way is what? Today. I know.
July 15th is the
for the first time in 25 years, I'm actually have given my tax returns to my accountant in advance of April 15th or at the due date. For the first, and he's got until July to file it. What a ripoff! I'm going to go stand over him until he But the bottom line becomes that, our underwriters still have to make that call. Is this stuff legitimate? Because, if somebody is filing a tax return, a lot of rental income, what does that look like currently? I mean, do you have current leases? Do you have people paying on time? They may be asking for bank account statements to show that the borrowers, are receiving the amounts they normally receive. As a landlord myself, I've been giving a break to my tenants, which, is nice. But when I go buy a house, I'm wondering if I'm going to have to explain I'm collecting 50% from my tenants for now. So there's all these complexities on the tax returns that are stories that normally an underwriter can derive about owning businesses, owning small businesses, owning a percentage of businesses, 25%. And those nuances, I will tell you, are going to be a hard assessment with the underwriting staffs, because they have to look at the kind of industry it is. Is it a high demand? If I own a nail salon, is it different than a dry cleaners? Is it different than a donut shop? I mean, perhaps, I kind of asked my donut guy down here, not that I go to him on a regular basis, but just checked with him to see, hey, how's business? Well, his business is off, even though he's still, there from the same hours to the same hours. So all these small businesses, it's going to be, again, interesting to see how underwriters really approach that. And I guess you're more on the front line with that, Blair and Alan, from what you've seen. But that's something that I'd love to hear feedback from you with the real practicalities in the last 30 days. And thank you for joining us, Kimmy.
Hi, lady.
We're back, we think.
Title is back.
And we're back.
Hey, Blair.
Sorry, y'all.
Blair, just
Yeah.
a footnote, buddy. To follow up on Tom's point he just made, my sister runs a bunch of underwriters down at USAA down in San Antonio, and she can explain the underwriting part really well.
Okay.
So we're going to have her on our show next week.
Well, that's what I was saying. It might be a good idea to do that.
That would be a
If they're
great
willing,
idea.
I don't know. Sometimes the underwriters are not able to and or are willing to. So that would be a great
My
show.
sister, I'll just get her on here to say hi. How are you?
That's sneaky.
Ladies, welcome back. We're so glad you were able to join us again. We went over a few things, but let's talk about the change in your business and that we're able to do things, mobile notaries. Those have been around for a long time, but it seems like you're using them more now. Is that true? Is that what we see happening?
Yes, some people just don't want to leave their home. So the option that we have is to send a mobile notary, and it works out great.
And the exception to that you have to go into the office is for what type of cases? What situations do not allow a mobile notary to go out and do that?
Well, home equity transactions. If it's a home equity, it must be closed at a title company, lending office, attorney's office. So you cannot go into their home and close that.
And so an
that
equity,
would be
that's an A6 cash
One
out.
transaction. Yes, correct.
And so coming in, I know you, Alan was giving me a taste of, I'm so used to being in my closings. I like being there. I like answering questions, being available for my borrowers. Right now, you're allowing only the borrowers themselves to come in with the escrow officer, but you allow either a phone call or using technology for somebody to be there for questions. Is that correct?
That's absolutely right. What we have been doing is if someone wants us to, we'll FaceTime the agent or even the lender or both and put them on the phone with us so it can be like they are there. But that way is just to kind of eliminate extras. So between every closing, when people walk in, we're not touching driver's license. We're getting pictures of driver's license. They get a brand new pen to sign with. They walk into the closing room. It's just been wiped down between every closing. We have masks, we have gloves, we have anything and everything we need to make the whoever's signing feel comfortable.
Do you
Now,
still have
one
coffee and
team
Milky
You have
Way?
hand
has made-
sanitizer
oh my gosh.
and toilet paper?
What? I
Nothing.
didn't hear that.
There's too much of a
Alan.
lag.
Yeah,
You got to get to a better Wi-Fi, that's for sure.
You didn't want to hear that anyway, you guys.
I think he was making a joke,
Oh.
a joke about is toilet paper available at every signing?
Oh,
It's funny to the guys. It's okay.
So
No, but I tell you that seriously, one of the most exciting times of the whole process is at title when you're closing. And that's a part that we're not talking about, but it's kind of a big deal. And that's why, people like me want to work with people like Kim and Cammie. I know when I bring my clients there and through that process there, it's going to be a positive experience no matter what issue we run into. And I guess from a standpoint of virtual distancing or whatever we're doing, it's going to suffer a little bit on that. But I think bottom line is we just won our house. But at the same time, some of the best moments I've ever had as a realtor have been at title. I've had people cry. I've had people laugh. I've had people, all sorts of emotion. I'm sure Kim and Cammie see that.
yeah, oh, agreed. I mean, everybody has every different emotion coming in, and now it's just kind of a different emotion. People are kind of joking about what's going on, or they're sitting there just wondering, what's going to happen next, how it's affecting, their moving situation. That seems to be a hot topic of people, how they're getting movers, how they're moving in, how clean the house is, those kind of things. So it's just different conversations at the closing table.
I just think how important it is for us, Alan or myself, to be with our clients during this happy time, and success has been reached. So I do miss it, but we do follow-ups in other ways. I'm sure keys are getting transferred just as easily because it is a big day. Like Alan said, this is, for 98% plus, this is the largest purchase in their lives, and it should be an exciting time and upstart time for them and a new life for them. What challenges are you seeing at title for people in dealing with? Is there something that we don't see that you see that just is overwhelming and that we need to let our listeners be aware of? This is what's happening.
Overwhelming. I'm sorry, I couldn't understand that last part.
Is there something that we, Alan or I or Tom, are not aware of that is important for the title process for customers to be prepared for, or that is just happening during this time because of the crisis here in America? Is there something that we're not thinking of that you see that we want to bring our listeners and make sure they're aware of?
Well, what we're doing a lot from the lender, we're sending them to the people to review. So if they want to be, we are finding that people are wanting to be in and out as fast as they can. Even first-time home buyers and people who normally will, we spend an hour or more with, they're literally wanting to come in and sign because they want the least amount of contact. So we're trying to email, get them the documents ahead of time so they can review it. We've been going over, we'll go over them with them before then. They come in, we can literally, just act as notaries. Again, that's just one option, but that is something that we haven't, done a lot of in the past.
And Kim, one quick question for you. I know you do a lot of the marketing there. What's changed for you on that front?
What was it?
For what?
Marketing.
On what?
Well, I know
How
you
you
do, I know
approach.
you do some marketing for Providence. What's changed on that front?
What's changed with Providence? Is that what he's saying? Are you saying what's changed as far as what's Providence is doing?
As far as marketing, yes.
I guess they're not understanding, Alan. Has the marketing efforts changed in any way during this time for you guys?
Efforts have changed. Is that what he said?
Our marketing efforts.
Yes.
Oh, okay. Marketing efforts. Yes, on marketing, we're finding out we're doing more the one-on-one conversations, a lot more sending out thank you notes, a lot more just trying to realtors one-on-one. Same thing, a lot of one-on-one contact. The CE classes. We just started doing Zoom classes this week for realtors for CE credit. So that's been a new show for everybody, trying to figure out how that works and how to, stay TREC compliant, those kind of things. And then marketing to, customers, we're really trying to put things on Facebook. We've been putting things every day, daily activities you can do with your kids at home, ideas just kind of to spark and keep people recognizing our name, basically. But we're really trying to just stress the fact that we are still here. We're still giving personal service. And, there are some title companies that are only doing drive-through curbside services, and we are still doing in-office closings.
Are you able to perform e-closings now as well?
Doing what kind?
E-closings, e-signature.
We can do the RON, the remote online notary. We can do those on certain transactions, cash transactions, cash seller sides. We do have one lender who has started doing a full package as on refis, not cash outs, but on refis. But as far as on purchases, right now, we're not doing a lot simply because most lenders are not equipped to accept the electronic signatures. They need actual wet signatures on like the deed of trust note, those kind of things.
Okay. Wonderful. Well, Tom, what do you see possibly with the market analysis and what's coming on? Do you see our industry kicking back in solidly, or are you seeing some question marks that we're going to have a slow momentum moving forward? Is it going to adjust? Are we going to be able to shift gears quickly? What are your thoughts on that?
I'm pretty sure the demand will stay high. It does rely on how many people go back to work with more than 1 million unemployment applications since this has started here in Texas. That's a substantial number with regards to people that, will they get back to work? If everybody gets back to work and we have a reasonableness as far as that goes, I think a lot of the industries that like Kim and her industry and ours and anything tied with buying a house will get back up full steam very quickly. The thing that we might see is we could see some price stabilization or lowering of prices is what I'm anticipating to some degree. And simply because they're still building houses at this juncture. But people, I think, will be a little bit, as far as demand is concerned, a little bit not quite as aggressive with paying whatever the price is that somebody asks for a house. I think we may see some of the negotiation going back and forth a couple or 3 times on certain properties, at least with regards to the values, and having it more intelligently negotiated than just, well, this is the only house that's ever going to come up. No, we're going to have I think Alan pointed out at first that there may be a huge surplus that drops on the market. And if that surplus drops on the market, there may not be enough demand, and so price is the thing that makes it very competitive. I'd love to hear Alan's take on that, because that's kind of what I'm thinking at this juncture.
Well, it's absolutely happened. Prices are coming down. Right now, investors are going to do well in this, I think. But yeah, prices have definitely come down, and demand is still there. Demand is going to still be there in Dallas Fort Worth. I know the jobs are hurting right now, but as the economy comes back, the demand is going to come back. But right now, it is slowing down. It has slowed down. Prices have come down. And for those people that have to sell because of job relocation or just have to for monetary reasons, they're going to get less money than they would have got, 2 months ago. So prices have come down. Demand is still there. I've got people that want to look at houses. It's just a combination of, how aggressive do I want to get, putting my health at risk and other people's health at risk. So all those factors go into it. And, but yeah, you're right on the money, Tom. It's the thing I'm worried about a little bit is how we release the markets back, the economy back. If we just let it rip tater chip, we're going to be in trouble. So it's going to have to come back gradual. The right industries, the little, like walk before you run or crawl before you walk type thing, a little at a time. And I think this can be done right. But and it's going to go right into, lenders do have the refis, title has refis. As a realtor, nothing. We're straight commission. And if somebody doesn't buy a home or I can't sell a house, I make nothing. So it's gotta be done right. And I think the best part of this is sellers right now understand that if they have to sell the market they're in, if they can afford to, they will take less money for a home. And that's just the way it is right now. I'm going out to show after the show is over and very carefully have everything ready to go. The homes we're looking at have all come down in price and some significantly. So a buyer who is moving here and is out of her place already in St. Louis has to buy a home, and they're going to get a good deal. It's just the way it is right now. And she's doing cash. That makes it all the better.
Well, and I think Lynn, who's a listener, just put up inventory is down because builders have stopped. There we go, 1.5 months as opposed to 4 to 6. I agree. We're seeing that in the market, and I think Texas is one of the states that is stronger. I think we're going to bounce back a little bit more quicker than the rest of the United States, just because of our rulings here. I think allow us not to have so much loss, but I think also our builders have been very timely in their efforts. And
one more quick thing about the builders, Blair, they never stopped working, not 1 minute in the sales office. So those homes have continued. I've got one under contract. I had two. One went away because of financing. They all lost their jobs. The other one is not going to be ready yet until like June, and they might get their jobs back. And as long as they continue in the same industry, I think that's going to work out based on what they're telling me. So the builders, they're still building, and they have inventory out there. Lynn is right, but they also have a lot of incentives out there for realtors to bring their clients. And believe me, it's a good thing to do that sometimes because it's kind of an easy way to get your client into a home, and it's new. And a lot of people like that. Some don't. But
as we see a decline in inventory, are builders going to be primary just so that, why do I want to buy a used home instead of a new home? Is that thought process come into play at any time, Alan?
There's reasons to buy new homes versus old homes and reason to buy older homes versus new. A lot of people don't want to put up with the construction in the neighborhood, the flat tires, the little trees, no landscaping, all that goes into play. On the other hand, you get a first-time home buyer. A lot of them now are a little older than they were back in the day. So a first-time home buyer now is 28, 28 to 32, 33 years old. They're buying their first home. They're coming out of their student debt, their student loans, or their jobs. They're making more money now, 5-6 years into their business. And a lot of them want to start brand new. So there's always going to be a market out there. And the builders, they don't build unless there's demand. Trust me, they're not stupid. And Dallas Fort Worth is going to have a very robust new construction going on. It's not going to stop. It's going to hiccup, just like the resale market hiccups. So they're going to do just fine. And as far as housing goes, we're going to do just fine because people come here from around the world, not just from Detroit, Chicago, and California. They come from around the world, and they're coming in a lot. A lot of them are coming.
Yeah. One of the interesting things, Tom, I guess I want to touch on that as we talk about inventory, we talk about the market. I'm seeing a very flat line over the last week and a half, and it seems like rates are going to continue to be good for a good period of this year. Would you agree with that statement overall, or would you say some indicators are going to possibly change, like how do we get the economy turned back on?
Well, I would probably have to go more with a historical venue with what we've seen in the past in 2008. I mean, we're going to be officially in a recession at this juncture. What happened in 2008 is the Federal Reserve steps in, and one of the tools in their tool shed is to buy mortgage-backed securities. And that artificially set the rate low, albeit at 4.5% and 5% back in the 2008 period, now artificially low at 3 and 4% as far as them maintaining what is investors see as, investors want to get out of the market. So the Fed says, well, we'll buy them. And so there's no pressure to go upward with regards to rates. What might happen, and I'm kind of really interested in seeing how this works out. Our supply chain is broken, just in case anybody is noticing when they go to the grocery store. And it's broken because we things coming not only from American manufacturers, that their folks aren't going in. I don't know if you saw the pork plant here in the United States that does about 4 or 5% of our pork products is closed. And that's going to raise, if you're a bacon eater, I'm not trying to do a bacon panic, by the way. Don't go to the store and say, well, I got to go buy 500 pounds of bacon. But the supply chain, for people to understand, is how things we have typically and understood, are put onto trucks and sent to us in the location where we buy it. We don't go to the warehouse. Even when we're going to Costco, we're not going to a warehouse. We're going to a place that's a retailer that has had stuff delivered there. And as such, what manufacturers are going to do is, or I think what retailers will have to do, is they see enough craziness, and a roll of toilet paper, which might cost $1 right now, might be $2 in 8 months or 7 months, because the supply chain, again, they've seen enough demand. They know people are willing to, they're not going to price gouge right now. I know any grocery store I've gone in, it seems like they're doing the best to mediate what they possibly can as far as costs on vegetables and fresh fruit and meat, like I just mentioned, and milk. I mean, they're throwing gallons and gallons and millions of gallons of milk just being tossed down the sink because the supply chain can't deliver it out there. Yeah. And that's something that we're going to realize that may cause, the magic word is the I word, inflation. Now, you and I and Alan have lived through 10 and 12 and 14% inflation. We're old folks. Keep in mind, my daughter has never seen above about a 2 or 3% inflation rate. And if that were to occur, you'll see rates follow inflation rates up. If inflation goes to 5 or 6 or 7%, which can't be out of the conversation, that would raise our interest rates to that, close to that level as well. So,
hey, just real quick, I wanted to acknowledge Pratham, who's watching the show from India. He has sent a message. He wanted to know what kind of channel this was. And I just wanted to get on here and say that.
Channel. Tell him a good channel.
Yeah, well, we know it's a good channel, but we talk everything real estate finance, finance law, teaching of real estate and finance, and all about lending. So welcome to the show. And we do it every Wednesday at 12 noon Central Standard Time right here in the Dallas-Fort Worth area.
Well, I'm very concerned that we might have just caused the bacon loss of the.
Just want to mention, you
I
know,
mean, the bacon run started with Tom. Tom
David,
Bacon.
I got bacon.
yeah, I just bought 40 pounds of it and put it in my freezer.
Oh, you hoarder. You're a big hoarder.
You hoarder. Now we know where the toilet paper went.
I bet he's got a little refrigerator and he calls it Porky.
Hey, I do want to thank Kim and Cammie of Providence Title joining us. I'm sorry the connection wasn't good, but we appreciate you taking time to be joining us. Please join us again. You brought some great insights for us. Guys, stay safe out there. We are going to come through this, and we will be able to, ultimately, our industry is going to kick in and be stronger for all of our learning curve going through this process. So God bless. I'm Blair Thomas.
And I'm Tom Holm.
And I'm Alan Pace with Keller Williams.
God bless. Take care. We'll see you next week.
Awesome, guys.